we are kicking things off with a revolution in music creation. Meet Zoe Wren, the musician, software engineer, and founder of Tamber, an AI-powered music creation platform that is changing how we make sound. Wren isn't interested in blatantly robbing musicians. She's building a future where you can make synthesizers sound like chocolate or snares that feel like blue. Tamber uses artificial intelligence to transform feelings and text into musical ideas, and we dive into how this platform is aiming to be the antidote to current generative AI trends. Next up, we look at the business side of bringing them crucial tools and networking opportunities. Find out how you can apply for the Hubb and jumpstart your path in the industry. And finally, we turn to the massive financial growth within the industry. UMG CFO Matt Ellis shared huge news about the Downtown Music Group, expecting it to inject 15 to 20 million euros in revenue into Virgin Music Group over the coming years. Ellis explains how this growth in lower-margin businesses is bolstering the overall health of the music business. Don't miss the full story on UMG's financial outlook. Stay with us. Zoe Wren, a musician and software engineer, has launched Tamber, an AI-powered music creation platform designed to transform descriptive text into musical ideas, aiming to make songwriting feel magical. Wren positions Tamber as an antidote to the current generative AI landscape, expressing strong skepticism regarding platforms trained on potentially stolen data. She stated, "If I were to describe this platform, I'd say I want it to make writing music feel magical, inspiring. That's my goal." Tamber functions as an Adobe Creative Suite for music, utilizing artificial intelligence to convert feelings, colors, and sounds into musical concepts. Wren emphasized her commitment to ethical development, questioning the training data sources and legal standing of competitors in the AI music space. The platform launches on Monday, May 18, and features several innovative tools. These include gestures, which allows musicians to shape musical effects and tones through hand movements. Librarian, a feature enabling users to scan and index their personal sample libraries to search for sounds based on descriptive terms like chocolate or blue. And City Packs, offering global sample libraries. To enhance user experience, Tamber is guided by Tambi, an animated mascot designed to automate parameters, build musical chains, and customize itself based on user preferences, evolving into a specialized production partner. Backed by a $5 million funding round from investors including Adobe Ventures and M13, Tamber was initially developed by Wren during the pandemic for personal use. Following the success of her song, Haley, she expanded it into a startup, driven by a need to combat the psychological pressure of the rapidly accelerating music creation speed. Wren highlighted the primary differentiator of Tamber. It does not train on third-party audio, directly contrasting it with competitors who have relied on scraped data. Furthermore, Tamber avoids purely generative output, focusing instead on providing tools that help musicians create faster and better, rather than flooding the market with uncurated content. Regarding competition, Wren sees Tamber defining a category as a sandbox for diverse music-making tools, distinguishing itself from generative remixing platforms and companies that rely heavily on mass-produced AI outputs. She believes the future of AI in music should be magical and artist-centric, emphasizing the need for technologies that genuinely respect and support musicians rather than replicating existing work. The Creative Artists Agency, or CAA, has officially opened applications for the 2026 edition of the Hubb, a free professional development program aimed at launching careers in the music business. This intensive program is designed to serve as a critical bridge between academic study and professional success within the music industry. Now in its 9th year, the Hubb has established itself as a high-impact pipeline, specifically focusing on equipping students from diverse backgrounds and underrepresented communities with essential tools, networking opportunities, and industry insights. The program is named in honor of the late CAA agent and educator, Barbara Babs Hubbard. The Hubb operates as an intensive workshop series targeting high-achieving college students, specifically juniors and seniors, as well as recent graduates who are dedicated to pursuing the business aspects of music. Although the program has strong historical ties to Nashville's music scene, its influence extends across the global music industry. Interested candidates are urged to highlight their deep passion for the industry and offer unique perspectives on the future direction of music in their applications. The application process is noted as competitive. Applicants must submit their materials via the provided link by May 22. A significant benefit for accepted participants is that CAA will cover all travel and accommodation expenses. CAA is positioning the Hubb as a vital opportunity for college students seeking to enter the music industry, offering them a direct pathway to connect with the powerful team assembled by CAA to accelerate their career trajectory. The Music ETF, MUSQ, has successfully launched its first investor conference, signaling a growing mainstream interest in music as a viable investment category. The inaugural Amplify Music Investment Summit, held on May 8th at the Virgin Hotels New York City, drew nearly 300 attendees, including representatives from major financial institutions like CNBC, Bloomberg, Reuters, Forbes, and music executive Clive Davis, resulting in a sold-out event. The conference, a joint presentation by MUSQ and the Mondo NYC Conference, provided an in-depth education on the entire music business ecosystem, covering streaming, content and distribution, live events, ticketing, and AI technology. Key speakers included a keynote conversation featuring CNBC's John Fort and Robert Kinkle, CEO of Warner Music Group, alongside Lisa Yang, Warner Music's global head of strategy. Founder and CEO of MUSQ, David Schulhoff, emphasized that the event was central to the strategy of launching the Pure Play Music Exchange-Traded Fund, ETF. Schulhoff noted that the goal is to educate advisors on the interconnected nature of the industry, highlighting how the underlying equities remain attractively priced. Analysis presented at the summit underscored a compelling investment case. Music equities were shown to trade at approximately 1/3 of the EBITDA multiples of other media companies, and at a discount to comparable private market deals. Goldman Sachs projects global music revenues to surge from $100 billion to over $200 billion by 2035, driven by streaming adoption, emerging markets, and AI efficiencies. The streaming segment is particularly significant, with 70% of global streaming revenues flowing to content owners. MUSQ tracks the MUSQ Global Music Industry Index, a portfolio comprising 35 to 45 companies across streaming, content, live events, technology, and equipment manufacturing. The fund emphasizes a significant allocation to pure-play music companies, alongside exposure to diversified tech giants like Apple and Google, and international holdings, including major K-pop entities, to capture global growth trends. Schulhoff positions MUSQ as both a thematic allocation and a diversification tool, offering recurring royalty revenue, intellectual property monetization, and global consumption patterns as key drivers. He describes the ETF as a liquid alternative, providing exposure to the music industry with liquidity that contrasts with the volatility of broader technology sectors. The success of the launch suggests that advisors are increasingly seeking thematic exposure backed by durable business models. Schulhoff believes the current market conditions represent a bull market for music, where the sector is undervalued. MUSQ is planning to expand the event next year based on overwhelming demand, reinforcing its position as a significant player in the evolving investment landscape for the music industry. Universal Music Group is projecting that its recently acquired Downtown Music Group will contribute between 15 to 20 million euros in revenue over the coming years, significantly boosting the growth trajectory of the Virgin Music Group. UMG Chief Financial Officer Matt Ellis announced these figures on Monday during a conference hosted by J.P. Morgan, emphasizing the strategic value of the acquisition. Ellis highlighted that the combined entity is driving 15 to 20 million euros in synergies over the next couple of years, projecting a mid-teens internal rate of return on the investment. He noted that Virgin Music Group is growing faster than UMG's overall recorded music division, largely due to the addition of Downtown. During the discussion, Ellis addressed concerns regarding margin pressures. He stated that the company's focus will remain on driving revenue and EBITDA rather than solely concentrating on short-term margin impacts, acknowledging that growth in lower-margin businesses like Downtown is influencing the overall growth profile. The comments follow a period of increased investor scrutiny, including criticism from billionaire investor Bill Ackman regarding UMG's prior investor communications and disclosures related to a potential merger in the United States. UMG has since responded by providing greater transparency, including separating the financials of Downtown and Virgin Music Group in its recent first-quarter results, the first since the acquisition of Downtown. Regarding overall flat margins expected in 2025, Ellis attributed the company's strength to operating leverage gained from its diverse businesses. He pointed out that three key segments, Virgin Music Group, physical distribution, and publishing, are currently expanding at faster rates than the recorded music division overall, although these lower-margin businesses are having a mixed effect on the gross margin line. Ellis declined to provide updates on a potential U.S. stock exchange listing or details on how contractual agreements with BMG and Concord, which are merging and contracting with UMG, will be affected post-merger. He also addressed artist advances, noting that total advances exceeded 400 million euros in 2025, marking an 8% increase over the past 6 years, which he characterized as a working capital investment recoverable through future sales. Looking ahead, Ellis anticipates a rise in streaming revenue in the coming year due to the implementation of 3 higher-priced deals struck with streaming platforms in 2025, though specific guidance was not disclosed. When questioned about merchandise impacting margins, Ellis expressed optimism regarding top-line growth and fan demand for merchandise, while stressing the need to resolve operational issues to improve margins.